Welcome to Money Guide with Sterk Financial, brought to you by the Forbes award-winning team at Sterk Financial Services.
Welcome to Money Guide with Sterk Financial. And today we have myself, Mary Sterk, the founding partner of Sterk Financial, and Jordan Ireland, who's one of my partners. And what we are here to talk about today is what happens when your pension goes away. Kind of a scary topic, isn't it, Jordan?
Yeah, it kind of throws you into a different frame of mind when you have a pension, and then all of a sudden they say, "Hey, we're going to do something a little bit different."
Yeah, and the thing about it is, it seems to be happening more and more. We even have some local pensions right now that have decided to pull up stakes. They're honoring what they have so far, but they're no longer going to provide it for a go-forward basis. And it really does change the game for people who retire when you've got that, taken away from you, basically.
Yeah, pensions were really created in a different time, when people were really staying at one company for their entire careers, and a lot of people weren't living for 30 years in retirement. So
Yeah.
a lot of things have changed, and it's making it difficult for a lot of companies to keep these pension plans in action.
The change, though, for the employees can be really stressful and can be a big cause of concern. So that's why we wanted to do this podcast episode. And our goal today is really to talk about what's actually happening when the pension terminates. What should you expect as an employee? What actions should you be taking? And what kind of common mistakes should you avoid? So that's what we're going to really dip into. It doesn't have to automatically mean that you've lost your retirement benefits. It means you've got to make some good choices and understand what's available to you. So, Jordan, dive a little bit into what a pension termination actually means.
Usually basically what it means is that they're having a transition to a different type of retirement plan. So, like I said, when pension plans used to be around when a different environment, they were not as expensive to maintain. People were staying there for their entire careers, all that kind of good stuff. Well, now we're in an environment where employers are trying to switch to something that's a little bit more cost efficient. And basically they're sending out notices saying, hey, you have to do something with the money that you have accrued. It's not just going away, it's not vanishing. But like you said, you have to make smart decisions with the options that are available for you.
And there's a couple different ways that an employer can do it. One of them is they can freeze the plan, and another one is they can just terminate the plan. And it doesn't necessarily mean, like Jordan just said, that the benefits go away. It's just that the accrual of future or more benefits is likely to stop. So that's kind of, the main thing to keep in mind. And there's two different kinds of termination. One of them is called a standard termination. That means that the plan does have enough assets in the plan to honor the commitments and to basically make the payments on the pension checks for the employees. There's also a distress termination, and that type of pension is a problem. It means that the pension doesn't have enough money in it to honor the checks, and that people probably aren't going to get anywhere near what they expected out of it. So one of the first things that you do want to understand is your pension termination a standard termination or a distress termination? And I really hope, for everybody's sake listening to this, it's the standard termination and not the distressed one. So, okay. So what are the first couple of things that'll happen as an employee when a pension actually terminates?
So you'll start receiving notices, there's lots of requirements that employers have to follow when they're terminating something. So you're going to receive notices in the mail. Make sure you read those very carefully. You will get all of your options explained to you.
Yep.
So, it's one of those things where, reach out to somebody if you need help. They're going to explain your options, but if you still have questions, don't feel pressured to just make a decision and, get it all taken care of. Make sure that you fully understand it before you do anything. And just know that your benefits are always calculated on the service that you have with the company. So, you've been there a longer time, you're going to have more of a payout option as well. If you've only been there for a year, I wouldn't expect a whole lot.
Yeah.
So,
And most of the time, the options that you're given are going to be some form of monthly payout. And
mhm.
there's a whole different slew of ways that that monthly payout can occur. Or some of them might offer a lump sum. And as an employee, really the biggest piece of the analysis that you need to do is to figure out which one of those options is the right option for you to take. And the reason that that's the most important thing is because your decision when you make this is irrevocable. Once you sign the papers and send them in, there's no changing it, there's no going back. You have made a decision that stands the test of time. You can't ever go back and change it. So
Mhm.
that's why it's important to pay attention.
Yep.
So when you get your notices, there's a few things that you want to verify on just to make sure the calculations are being done correctly. First of all, you want to verify your years of service are in there correctly. You want to look at your salary history if that's reflected on the documents and make sure that's correct. And then if there's beneficiary information involved, you want to make sure that that is correct also. So those are some double checks to do just right off the bat to make sure that what they're offering you is in line with what you have earned. So that's an important piece too.
Yeah. And you always make sure you keep copies of stuff
Yep.
because again, you can always throw stuff away later. That's what, I always tell people you can always throw stuff away later. Keep more than you feel like you have to right now because there's gonna be important information kind of coming at you, full throttle. So keep copies of your benefit statements, plan notices, employment records, all the contact information for the pension plan. Just make sure you have as much information as possible. So if you do have to get somebody else involved in helping you make the decision, you've got everything there, easy reference.
Part of the reason it's important to keep some of these documents is let's say that you do choose a monthly option, but it's not going to start for years in the future. If that pension plan is terminated, you're not going to get ongoing information on a regular basis about it. And it might be up to you to initiate that claim later in life. And so you're going to want to keep a hold of contact information and how to get a hold of the pension plan so that when it's time to trigger those benefits down the road, if it's not immediate, when it's time to trigger them down the road, that you have the information on how to actually going about doing that. I think people sometimes lose this information in the shuffle of life, so it's important to keep good records about it.
Yep.
The next thing I would say is ask questions if something doesn't look right. So you should question your benefit calculation if it looks a little funny to you. You should make sure you understand what the options mean. And most critically, you need to know what the deadlines are. So we have a local one that is happening now. The deadline is the middle of next month for people to get their paperwork back. If you miss that deadline, it will default you to an option, and that option might not be what you wanted to choose or might not have very good tax implications for you. So it's really important to understand the deadlines and that you get all of your paperwork back in, signed, sealed, and delivered by the D date.
Yes, absolutely.
Congratulations to Mary Sterk and the team at Sterk Financial for earning a spot on multiple Forbes lists for 9 years running, including the 2026 Forbes Best in State Wealth Advisors and the 2026 Forbes Top Women Wealth Advisors Best in State.
So talk a little bit about tax implications, Jordan. What do
Yep.
people need to know about that?
So I know for a lot of people, whether you're just not sure or whether it's just tempting to have like a lump sum of cash, taking a lump sum can be one of the most detrimental things to not only your current tax situation, but your retirement planning long term.
If you
So
take it in cash, right?
if you take it in cash,
Yeah.
yes.
Okay.
So, people, sometimes people don't realize that there is a big difference between taking that lump sum in cash versus doing like a direct rollover to an IRA so that you can continue to defer those taxes until you want to start taking the money out in retirement. So again, understanding your options is so important because those are two options that they look pretty similar. You're taking a lump sum, but it's a big difference between taking it in cash and doing a rollover to an IRA. And then, really just doing the evaluation between doing the lump sum versus what does a monthly look for you. So, yeah.
So if you do a lump sum as cash, you're going to have tax in the current year, and that is likely to be taxed as ordinary income. And so it could certainly bump up your tax bracket to a higher rate, depending on what your numbers are and what your income is. So that is something to be very aware of. If you do a lump sum rollover to an IRA, it continues to stay tax deferred, and then you will pay taxes on it when you withdraw the money in the future. Now, everybody's decision about what to take is going to be a personal one and depends on what their own situation is. But it's important to know current tax versus delay the tax. That's a big issue.
It is.
Now, the monthly options, really are something that speaking with a tax professional or speaking with a financial advisor might be critical for you to evaluate because sometimes the lump sum might be the most effective thing for people to take, and sometimes the monthly options might be the most effective. And there are there are real reasons that somebody might choose a monthly, and there are real reasons somebody might choose a lump sum. So when you look at the monthly options, sometimes the monthly options will be a lifetime amount just for you, but it will go away if you're married. So if you die when you're married, your spouse may not get anything. So you need to know that to be doing proper planning for them. Sometimes there'll be a certain number of years it will continue to your spouse, or sometimes it will be a percentage of the amount that will continue to your spouse. So there's different ways that those payments can come out. Don't just think, oh, I'm going to choose the biggest monthly option and be done with it, because it could have poor implications for your spouse or your family, especially if you die sooner than you expect.
Yep.
And then the difference between the monthly and the lump sum is important too, because let's just say that you take the monthly and then you die too soon, that whole pension's gone. Versus if you take the lump sum and put it into an IRA, you have beneficiaries listed that are going to inherit some of the residual amount. So there's big differences in how that plays out in your family setting.
Mhm. Right. Read the fine print on all
Yeah.
that because you're going to have a lot of options, and make sure you know all of the implications of each of the options.
Right. Now, if you don't know how to figure out what's your best one, or if you just want to bounce ideas off of somebody, that's the ideal time for you to reach out and talk to a financial advisor. Advisors have different calculators that they can run to kind of show you the long-term impact of if you take a lump sum and if it grows hypothetically at a certain amount, what might be the income that you can take, what might be the long-term impact for your beneficiaries versus that monthly option. And that's going to help you pinpoint what's the right chess move to make for you with this decision that you can never change once you make it. So it's important to do the research to make the right decision.
It's a scary thing when you're making a decision that can't be undone.
Yeah, exactly.
So yeah,
Exactly.
make sure you have your ducks in a row.
Now, some people start to wonder things like, well, how long does this process take? And, when am I going to get this done and things like that? That's all dependent on your plan. And the information about the timeline for pension terminations is always going to be in the material that the employer and the pension plan sends out to you. So each one is different. So there's no, one answer fits all for that. So again, that's where you really want to read the fine print, like Jordan said. Okay, so let's talk about mistakes to avoid because this is a big decision. You don't want to screw it up. So, Jordan, what would you say is the top 5 mistakes to avoid with this?
So ignoring the notifications.
Yeah,
I think
don't
we
ignore
are,
them.
I think we are all guilty of you get something that looks like, junk mail, or it's like, oh, I can look at that later. You toss it to the side, look at the notifications. That's like number one thing.
Yep.
Um, Misunderstanding your options. We talked about that,
Sure.
making sure that, it's like the options say what they are, but make sure you know all of the details of each of the options so that you're not messing with your total plan. You've got plans if you're married, you've got plans depending on how long you're going to work. Make sure that the option that you're choosing is fitting into your whole plan. Um, Not paying attention to the tax consequences, like we said, big tax consequences if you take a lump sum cash payout and then missing the deadline. You mentioned that right away. That can be, it's to have a choice that big made for you just because you missed a deadline. Just pay attention to all of the details. It seems like a lot of pressure, but the information's all there. There's plenty of resources out there. Just make sure that you're taking the time to make the best decision for yourself.
Well said. I think that covers the mistakes to avoid really well, Jordan. So let me just give you a quick recap here of some of the things we talked about today. Number one, pensions do terminate. It doesn't have to be the end of the world for you, but it does mean that you need to do the appropriate planning to understand how this change affects you, make a good decision for yourself, and then know that that decision can't be changed. So you're making that one-time decision. Don't ignore the notices. Make sure you understand the options. Make sure you understand the tax implications. ask questions before making decisions, get help from an uninterested party, a tax preparer or a financial advisor that can help guide you through some of those decisions, the pros and cons of the decision so that you know what's right for you. And I guess I just want to end with some reassurance. This is a significant change in somebody's life when your pension changes. And it doesn't necessarily mean that your retirement benefits are gone. It just means that they're not going to continue to accrue like you thought that they were going to. So pay attention, get your forms filled out, seek help when you need it, and hopefully this pension termination will just be a small blip in your retirement radar.
Yeah. And use it as an opportunity. This is a big life change. Use it as an opportunity to, kind of expand on your retirement planning. Make sure that you hit the ground running right after that pension plan ends, and you've got a plan going forward on how you're best going to save for your retirement going forward.
That's a very good point, Jordan. Very good point. All right, well, we hope this has been helpful for you. And if you have any questions about your own pension terminating, don't hesitate to reach out to one of our advisors and we can help discuss some things with you, these different points that we talked about today. And thank you for listening to Money Guide with Sterk Financial.
Sterk Financial Services celebrated 20 years in 2024. The views expressed are not necessarily the opinion of your audio provider and should not be construed directly or indirectly as an offer to buy or sell any securities or services mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can ensure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should only be relied upon when coordinated with individual professional advice. Securities and investment advisory services offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance offered through Sterk Financial Services, which is not affiliated with Osaic Wealth. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth. The rankings for the Forbes Best in State Wealth Advisors list by Shook Research is based on due diligence meetings to evaluate each advisor qualitatively, a major component of a ranking algorithm that includes client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and review generated for their firms. The Forbes ranking of America's top women wealth advisors is based on an algorithm of qualitative and quantitative data, rating thousands of wealth advisors with a minimum of 7 years of experience and weighing factors like revenue trends, assets under management, compliance records, industry experience, and best practices learned through telephone and in-person interviews. There is no fee in exchange for rankings. Forbes is a trademark of Forbes Media LLC. All rights reserved. Rankings and recognition from Forbes, Shook Research are no guarantee of future investment success and do not ensure that a current or prospective client will experience a higher level of performance results, and such rankings should not be construed as an endorsement of the advisor.